All right, guys. Hello, welcome back to Everything Business. In this video, I will be looking at a past paper question, 2019 to be exact. All right. At the end of each question, I will give you my opinion on the difficulty level of the question. All right, so that you can, have an idea. Right. I want you to pay attention to the question and how I work out the question and how I, solve the question. One of the things that I want you to focus on as well is when you get a CXC question, you need to ensure that you read through the question carefully and don't get flustered, right? Because the questions on the CXC paper tend to be slightly different from what you are used to in your textbooks, right? And so practicing from CXC type questions is the best way to be prepared for the exam. All right, so let's look at this question. The first thing you do when you see a question is to read through the question, right? And so it says Simone Cook is a producer of natural juices, and on the 31st of January 2018, she provided the following information about her assets and liabilities, right? So we are given some information here concerning inventory. Right, so inventory is valued at $50,000. She owns an industrial blender valued at $200,000. Right, she bought a van valued $140,000. She took a loan to do that. Right, a 6-year loan of $60,000. Right, the farmer, tea farmer, promised to supply some apples for the cedar farm. Was paid $9,000 in advance. Right, Simone Cook owns a refrigerator valued at $95,000. Right, Health Food Store was supplied, which means that Simone Cook would have sold on credit to Health Food Store, valuing $10,000. Right, it means that Health Food Store would have been a debtor. You get what I'm saying? Because they didn't pay the same time. As a matter of fact, it says on credit. Rent for $20,000 is still outstanding. Right, for the month of January. Ultimate Muscle Builder Limited owes Simone Cook $15,000 for the products. So Ultimate Muscle Builder would have been a debtor as well, or you can say, accounts receivable. Simone Cook holds $18,000 in her bank account and $8,000 in the cash register. We are given some additional notes here, right? It says that interest is charged on loan, right, which has not yet been paid. Now, loan interest is an expense to the business, right? Which it should not come in this section. However, it is accrued, which means that it is owing. So it is going to come in this section, right? Then it says Simone Cook has decided to depreciate delivery van using the straight line method of depreciation. She expects to get 8 years of service from the van, at the end of which she anticipates she can sell it for $12,000. Now, the reason why they give us all of this information, right, is because the value for depreciation is not known. Therefore, you would have to calculate it, right? And then they said to you that you are to account for the month of January depreciation. So we are doing this for the month of January, right? And so we have to calculate the depreciation for, not for the year, but for the month. They said we are required to, using all the information provided above, prepare a classified statement of financial position or the balance sheet for Simone Cook in the vertical style as at the 31st of January 2018. And we are to use the order of permanence in classifying assets, right? They said we should show the working capital clearly and run off all workings to the nearest whole number. All right, so this is a fair question. What I realize is there are a lot of calculations that needed to be done. Now I want you to look at what I have here. So you start with your heading, right? Very important. When I used to go to school, teachers used to tell me that they get marked by heading. So they said the order of permanence, right? And so the refrigerator and the blender would be, in my opinion, more permanent than the motor van. So that is why I have these assets first. Right, so you put the refrigerator and the blender, you put the amount there, 95 and 200,000. Right, as you can see when I was going through here, right, I just went through and FA would stand for fixed asset. You can do that too. You're going through, you're right. So you remember fixed assets, what are the fixed assets. It helps you to go quicker, right? And then the van needs to be depreciated. Now I put my work in here. You don't have to put this here when you're doing it. It is good if you have it though, right? It's not like you're going to lose any marks or anything, right? So the van at cost was 140,000, right? See it here, 140,000, right? We are going to subtract our depreciation, right? But we have to calculate depreciation. So I put my workings here. The formula for depreciation is what? Cost minus residual value or selling price divided by number of years, which is 8. And because we're doing it from 1 month, we have to divide what we get. The answer that we get, we have to divide it by 12, which is we get 1,333. So you subtract this from the 140, and you get the net book value of the asset. You add up all your fixed assets and you get the 433,667. Then you move on to your current assets. And I want you to pay attention. I don't have my fixed assets heading up here. It should be there, but it's not there. So just keep that in mind. So you move to the current asset section, right? You list them in the order of liquidity, right? So you start with your stock, your closing stock. The question did tell us what our closing stock was, right? So see there, stock on hand valued at 50,000, right? At the end of January, she had stock valuing 50,000. So that's the closing stock. Then you have your debtors, right? We have 2 debtors. Debtors, this one, health food store, right? 10,000, and ultimate muscle builder. So what I did was I just add both of them. So you get 25,000. Prepaid expense is also a current asset, right? And I want you to pay attention to the prepaid expense. The prepaid expense here is what she paid in advance, right? So to T Pharma, see there, right? So T Pharma had promised to supply some apples, but what she did was she paid in advance. So that's prepaid. She basically, T Pharma would owe her that money, right? So that's prepaid expense. Then you have the bank account and you have the cash account, which is given there. Add up all of your current assets and you get this figure here. Then now you're going to subtract your current liabilities, and this can be a little bit debatable, right? The loan can be said to be a long-term loan, right? And I have it here as a current liability, which would indicate that it's a short-term loan, right? Either way, you would still get the mark, right? So the loan, which is $60,000, the loan interest, and the reason why loan interest accrued, the word accrued you should know by now, right? It means owing. So loan interest was not paid. Generally, loan interest would not be here. It would be in the profit and loss section of the income statement. But because it is owing, it should be here. It is placed here. And also rent owing, right? Accrued, right? It is right here as well. So you add up all your liabilities, your current liabilities, that is, and you get the 92,000 here, which you're going to subtract from your current assets to get your working capital. Remember your working capital formula. And then now, when you get your working capital, you're going to add, right, this figure to your fixed assets figure, and you get the 451,667. All right, so if you're going to treat the loan as a long-term loan, right, which some of your teachers may tell you it's a long-term loan, it's neither here nor there. It's not a problem because you will still get by the same. And so what you would need to do, it would not be here, so it would not be there. So you would have 12,000 plus 2,000, right, which would give you 32,000. So instead of having 92,000 here, you would have 32,000 that you would subtract, right, from the 110,000. So 110,000 minus 32,000 would give you 78,000 here, right? So 78,000 would be there that you would now add to the 433,000 up top there, 667. So you would get 511,667 here. And then you would have another heading that says less long-term liabilities. You wouldn't double line it. And then you would subtract the 60,000 now. And then you would get the 451,667, right? And that's it, right? That's your 20 marks. It's 20 marks, right? It's not shown here because on the next page, page 6, right? On page 6, they have another section like this, set up like this. I guess for persons who write big or, stuff like that. But that's 20 marks. And my opinion as it relates to the difficulty level of this question, I think this question, out of 10, 10 being the most difficult, 1 being extremely easy or very easy, I would give this question a 6, 6 out of 10. The average accounting student should be able to pass this question, right? And so let's move on to question 2. All right, guys, so let's look at question 2 now. All right, so question 2, it says P. Smith, a sole proprietor, presented the following list of selected account balances. And so you are given the balances here. You have the bank balance, right, which can either be debit or credit, right? You have the purchases, all of these, right? Purchases, sales, Pt1, Pt1. The fact that Pt1 has a credit balance that would indicate that Pt1 is a creditor, right? Pt1 would be a debtor, right? Because you have a debit balance. Remember those little things. So it says, using pages 9 and 10 of your answer booklet, open the appropriate accounts for each account listed and record the balances brought forward at the 1st of January 2018, right? So that's the first instruction that we are given. So you can go ahead and open the accounts, right? It's the account, so you open the accounts there, put in the opening balances. So there for bank, it's on the debit side, purchases on the debit side, sales on the credit side, Pt1 on the credit on the debit side, sorry, Pt1 on the credit side, right? And I have the other ones, right? I have them as well. The other accounts, right? Not sure if you're seeing that one. Oh, sorry. Yeah, so see the other ones here. Discount allowed, discount receive, drawings. Well, these are what I have to draw up. So let's continue. So you do that, right? Then it says, during the month of January 2018, the following transactions were recorded for P. Smith, right? So on the 2nd of January, a check for $460 was received from C. John in full settlement of his account, right? P. Smith gave him a discount for early settlement of the account. So check for $460 was received from C. John. So the fact that the check was received, right? We have to debit the bank account for that. Say $460, right? The amount is coming from C. John, not true. $460, right? He wanted to settle his account, right? He had owed $500 because that was the balance on his account, $500. He paid $460, as you can see right here. It says that we gave him a discount. If you realize the amount for discount is not there because they're expecting you, right, to calculate or to deduce the amount that was for the discount or the amount allowed for discount, right? So all you would need to do is to subtract the 460 from the 500 and you'll get $40, which is the discounts allowed. So you would put the discounts allowed on the credit side, right, to reduce his account, and you would also go to the discount allowed account and you would debit it with the $40 as I have right here. All right, remember that every debit must have a credit, every credit must have a debit, and discount allowed is also an expense, right? And so that is the reason why you would debit discount allowed. So that's the first transaction. January 3 now, P. Smith received an invoice for $950 from Pt1 for inventory bought on credit. So you're buying inventory on credit, right, from Pt1. So obviously that is purchases. You would debit the purchases account. Purchases account is always debited. And you would credit Pt1 account. Where's Pt1? Yeah, right? Just like that, simple, $950, right? Next one, January 9, an invoice was prepared for C. John totaling $600 for goods delivered on credit, right? So if you analyze this question, right, you would realize that you are now selling C. John some goods on credit. So you have the sales account here, January 9, C. John, $600. C. John now you would debit his account because he's receiving, right, the goods, or you can say that he's a debtor and his account is increasing, right? So you would debit his account. So your credit sales and your debit C. John account, right? Then the next one, January 17, P. Smith issued a check for 1,100 to Tichan, and this was in full settlement of his account. And P. Smith was entitled to a discount from Tichan for the January 3 transaction. So this you're talking about now. Tichan's account, right? He had received a discount. Tichan had given a discount to P. Smith, right? P. Smith would have paid a check to Tichan. So Tichan's account, January 17, he would debit his account, right? Yeah, because he's receiving, if you want to look at it that way. Or you can say his account is being reduced as a creditor. And then the bank account, you're paying out money to Tichan, you credit the bank account, right? You could also use the journal to do this question, but they did not specify what you are supposed to use, so you can draw a better account just like this, or you could have used a general journal to show all of the information, and it still would have gotten the mark. All right. And you put the discount received from Tichan, which is $150. How did I get $150? You simply balance off the account. So you add up this side, and then you subtract this from what you get, right? And then you get the 150. So this side would have added up to 1,250. And so 1,100 from the 1,250 would give you 150. So you know that is what you had received as discount, right? And we have to have our discount received account. Discount received account, here it is. 150 there, January 17. Discount received account carries a credit balance now. So that is the reason why you would credit it here. All right. 25, January 25. P. Smith withdrew $900 for the bank for his personal use. The two accounts that we need here is bank and drawings. And the fact that we need drawings because he's withdrawing the money out of his account for his personal use. That's why we need drawings, right? And so the bank is going to be credited here. See there? Drawings, 900. And you need to have your drawings account, which is an expense account, right? So it's going to be debited. And if you remember those little tips, it's easy, right? The drawings expenses account is going to be debited, right? So you know that's what's going to happen right there. Then you go to the last one now, January 31. P. Smith bought a car from Vroom Limited on credit. So the two accounts there are not purchases because the motor car would be a fixed asset, so it can't be purchases. Remember that. So fixed asset need to have their own account. So you're going to have the car account, and then you're going to have Vroom Limited, which is the name of the creditor, right? So you didn't use cash or you didn't use check. So you can't have bank or cash, right? You need Vroom Limited, right? So you're going to debit the car account as you see right here, right? And you credit Vroom Limited, right? You can write motor car if you want or whatever, but because they have car, I just write car. All right. All right. So yeah, that's basically what they ask you to do. Then this is basically B1. We did B1 as well. All right. Then they said no, balance off total and rule the bank account at the end of the month, which is 2 marks. Pay attention to that. They said the bank account. So I don't want you to go and be balancing off all the accounts. That's wasting time. You're not going to get any marks for that. They did specify the bank account, right? Now, because of space constraint, I did not bring down the balance to February 1. The balance brought down, which would have been on the debit side for February 1, right? But, you can do that, right? The account is closed off. As you can see, we balance off the account. How did I balance off the account, you may ask? I added both sides to get their totals. So I added up the debit side, added up the credit side, right? When you add up the debit side, you get 2,210. And when you add up the credit side, you get $2,000, right? So the difference between both sides is what? 210, and that is the balance carried down. All right. So we have just gotten 9 plus 7 is what? 16 plus 2, 18 marks. 18 marks out of the 20, right? That's not bad. This wasn't that difficult, right? It wasn't difficult at all, right? So let us look at now the next part of the question. I think the question have another part to it now. So let us look at the next part of the question. So look at this now. Part C, right? Part C says using the account of Pt1, calculate the amount of the 17th of January check which applied to the purchases of the 3rd of January. Show all workings. So if you look at Pt1's account, he had an opening balance of $300, right? And what that means is you had owed him $300. You bought some additional goods from him, which means that now you owe him what? $900, you pay him $950 for you know? So it means that you would have owed him what? $1,250. You made a payment of $1,100. And the question said that you cleared your account. So you would have gotten a discount of what? $150. So all you need to do is to show them how you do that. All right, so part 2 of question C, right? You are supposed to calculate the percentage discount that P. Smith received with respect to Pt1's transaction on the 3rd of January and its subsequent settlement on the 17th of January. So he was supposed to pay $1,250, but he paid $1,100, right? So it's going to be $150, which is the discount that he got, divided by $1,250, multiplied by 100 because you want to get the percentage discount rate, and that gives us 12%, right? Difficulty level of question 2. I would say question 2, it's a difficulty level of 3 out of 10. It's not that difficult. It's really, really simple, really easy. Now, let us look at question 3. All right, guys. So let us look at question 3 now, right? A little disclaimer about my question 3. I had not headed up my page properly, right? And I had gone ahead and done everything right here where the question actually asked for the income statement to be done here and the appropriation account to be done here. But I did everything on this one page so that you guys can see, right, the relation between the question. But when if you get a question like this, right, you follow the instruction and do the appropriation account on this side. I didn't want to have to be scrolling back and forth, you know. It can be distracting. So let us look at this question now. This is a partnership question, right? So far we have looked at a balance sheet question, we have looked at a double entry question, and now question 3 is a partnership question. So far the paper is not that hard enough so far. All right, so let us look at question 3, right? It says Ryan and Ayana, right, are partners sharing profit and losses in the ratio 6:4 respectively. Very important information. At the end of the financial year, 31st of August 2017, the following selected balances were extracted from the books of the partnership after calculation of that year's gross income, right? So they did tell us, right, that, you know, the gross income is there. Then we are given the current account balances, we are given drawings information, we are given the capital account balances. We are given the closing inventory, which is $73,000. We are given information about Ryan lending some money to the partnership. We are also given some non-current assets. And when it says non-current assets, for those persons who don't know, we are talking about fixed assets, right? So this fixed assets information, we are given the cost of the fixed asset. We are given the accumulated depreciation for the fixed asset. We are given expense information, and we are given the gross profit information. Additional information are down here at the bottom. Closing inventory had been understated by $5,000. Pay attention to that, people. Very important. Fixed assets or non-current assets are to be depreciated by 20% per annum using the reducing balance method. Very important for you to note that, people. Right? Operating expenses, which were due and remain unpaid at the 31st of August 2017, it totaled $6,000, right? And then the partnership agreement included the following terms. Ryan is entitled to receive 10% for his loan. Aina is to receive salary of $36,000 per year. 3% interest on capital is to be paid to partners, and then you see the interest on drawings information that is given there. So you're required to do on page 13, right? You are to provide the income statement for the partnership, right? Now, all the information that they give to provide the income statement is only the profit and loss section of the income statement we would be able to do. So if you look at what I have here, obviously you would have your heading, Ryan and Ina, income statement, and you would put in bracket extract there, and then the date for the year ending, whatever. All right. Yes, like that. Very good. All right. Then now, so you start with your gross profit. Now, I want you to pay keen attention to this now, especially this information here. It says closing inventory on the 31st of August 2017 had been understated. And what they are testing here actually is your knowledge about single and incomplete records, right? That's a single and incomplete, that's an incomplete record type of transaction, right? Because the fact that the closing inventory is understated by $5,000, it will affect your gross income. How will it affect your gross income, you may ask? If your closing inventory is understated, then it means that it would increase your gross income, right? It would increase your gross income. So if it is understated, which means that it is short, your closing stock then should be more, which would reduce your cost of sales, which would inadvertently increase your gross profit. So you add the 5,000 to the 327,000, and you get the 332,000 right here. So that's the first thing. This is a very big work that you should do. If you get this part incorrect, then you know that everything else is going to be incorrect, right? Then now you move on to the less expenses. You can put your calculation in bracket there, or you could have just gone down in a line and you put add understatement of whatever. You put what it there, right? But the question didn't ask you specifically to do that. So you can just put your calculation in bracket there. The examiner would see that you know what to do, and you would still get the full marks, right? Then you move on to your expenses now. Now, this is where you have to do a lot of other calculations, right? Again, I chose the method of just using the brackets. You don't have to choose that method. You can always go down in another line, especially for the $6,000. So the operating expense, right? The operating expenses is $88,000. You may wonder where I get that $6,000 from, right? It says operating expenses which were due and remain unpaid, it's $6,000. So the $6,000 here, right, is for the operating expenses that were not paid, right? Then depreciation, right? Now depreciation is another thing that we have to calculate, right? It says that we would calculate depreciation 20% per annum. See here, 20% per annum using the reducing balance method. Now, when you are using the reducing balance method to calculate depreciation, you have to know what to do. So this is the cost price of the fixed asset, $960,000. Then you have to subtract. So if I should bring up my calculator, don't think you're going to see my calculator, right? So, all right, so I bring up my calculator here, right? Now I want to show you how to work out the depreciation. So the cost of the asset is $960,000, right? $960,000, right? Because we are doing the reducing balance method, we have to now subtract the accumulated depreciation. So you have to subtract the accumulated depreciation, which is $210,000, right? And you get $750,000, which is the $750,000 I have right here, right? See there, $750,000. And the question went on to state that we have to calculate 20%. So when you are using the reduced balance, we have just calculated the reduced balance, which is what? $750,000. We have to find 20% of that. So 20% of $750,000, right? And if by this level, you should know how to calculate that on your calculator. So $750,000 multiply, right, by 20%. You can say multiply by 0.2, which is the same thing as 20%, or 20 divided by 100, right? And you get the 150,000. So there is the 150,000, right, that I get for depreciation. So that is how I get my depreciation figure. All right. Continuing. Loan interest, as I was talking about, loan interest, right? Loan interest is an expense to the business and must be subtracted as well from your gross profit, or it must be included in your expenses section of your income statement. And so it says 10% per annum. So it's going to be 10% of $4,000. Sorry, 10% of $40,000. All right, 10% of any figure. So if you should go here, right, you say $40,000, right, multiply by 0.1, which is the same as 10%, equal $4,000. That is how I get the 4,000. I should have put it here, right? I should have put it here, right? But apologies for that. And now you add up all your expenses. You could put a line down here that says total expenses. You know, I'm not so much for the long way. So if you are in an exam situation, you may be strapped for time and you're trying to move quickly. Unless you are asked to, you don't have to show all of those steps, right? So this is my total expenses, 248,000, right? 248,000 you subtract from your gross profit, you get a net profit, which is 84,000. Now, based on this question, what you should have done, or what I should have done, was to double line, right? And then put my net profit there. And that question would have been finished. You would have gotten your 8 marks. Then now we would have moved to the next page, right here, to do the appropriation. You would head up again with your heading there, and you would start again with your net profit, which is the same net profit that is here, right? Sorry, the same net profit that is here, the 84,000. You would have put that back there on this continue, right? But because I don't want to be skipping back and forth, I'll do it on one page, right? So this is the appropriation account now. So let's look at the appropriation account. Now, for persons who are not familiar with the partnership accounts, right, or partnership accounting, I have a video on it. You can check out my video. The link is in the description, so check that out. You start with your net profit. So it's right there. You add the interest and drawings, and the interest and drawings is very simple. They give it to us, so we don't even need to calculate it. See here, interest charge and drawings, 4,800 and 3,400. So you put that there. You add them, you get 92,200. We were told that Aina is supposed to receive a salary, right? See there, Aina is to receive partnership salary, 36,000, right? So your less salary, you put it there. You're going to also less interest and capital. We were told that interest and capital is to be charged at what? Is to be paid, sorry, at 3% on the partner's capital accounts. So it's 3%. These are the capital accounts right here, 320 and 300. So you calculate 3% of that. 3% of 320, you get 960. 3% of 300, you get 9,000. Right? You add up all of these because we're going to subtract them. We get 54,600. You subtract it. From the 92,200, you get 37,600, which is the balance of profits. Now, that is what we are going to share. Right? Now, how they gave us the profit sharing ratio is in this ratio format, 6:4. Right? 6:4 respectively. So it means that Ryan is supposed to get 6% sorry, not 6%, 60%, and Aina is supposed to get 40%. But how did I get that? Anytime you're given a ratio like this, you add the two numbers. So 6 plus 4 is going to be equal to 10. And then you would say 6 divided by 10 for Ryan, 4 divided by 10 for Aina. This is the same as 60% or 40%. So this is how it is right here. So it's 60% of 37,600, which is 22,560. Aina, it is 40% of 37,600, which is 15,040, right? And you get back the same 37,600, and so you have successfully shared up the amount of money, right? So that is what you would have had here for 7 marks, right? Pretty simple. Then they ask you realize that the marks is less than the previous one, right? See, the marks is less now because the income statement, you have to do more calculation, right? All right, now they said prepare Aina's current account for the year ended the 31st of August. I should have had her name at the top here, right? And I should have had Aina's current account, right? For the year ended, whatever, it should have been right here. Oh, I can drop it in. So there it is. Yes, so there it is. All right. Now, key principle to remember about current account: any item that increases a partner's capital is credited, and any item that decreases a partner's capital is debited. Right? So we were given the opening balance, right? So we put in the opening balance here. And you might say, where is the opening balance? And why did I put it on the credit side? Let me show you. I didn't want to have to be switching back and forth. Right? So there it is. So the current account here, INA, and it's on the credit side, $9,000, which is where it should be. It is the norm, right? For Ryan, it's not the norm, right? So yeah, $9,000. You would add his salary and his profits and his interest on capital, because all these items would increase his capital. Drawings and interest on drawings would decrease his capital. That is why they're on the debit side. And simple, what you need to do next is to balance off the account, right? So you add up both sides to get your total. When you add up both sides, you realize that the credit side is 69,040. The debit side is 33,400. So you subtract the 33,000. So let me just show you how I got that. So the 69,040 minus 33,400, right, equal I made an error here. So it is 69,040, right, minus 33,400. You get 35,640. So that is how I got the 35,640 here. All right, that's 5 marks, easy 5 marks, and that's how you get 20 marks. All right, now I want you to join me in part 2, where I will look at question 4 and question 5 of this 2019 paper. So far so good. I don't see anything really too challenging as yet. So see me in my next video.